Many of you ask, among all the technical analysis methods, which one is the best? Our answer is, if we master demand and supply trading, we will definitely see improvement in our trading journey. Among all technical analysis methods, demand and supply is the most powerful. And yes, if we just focus on mastering the concept of demand and supply, along with risk management, that's enough to become a profitable trader. Now, why is demand and supply trading so powerful? Here are some key reasons. 1. When we trade based on demand and supply, we can identify where big players like institutions and banks are buying and selling. 2. The demand and supply concept is universal. It works across all time frames, whether it's 5 minutes, 15 minutes, or daily. 1. What is the concept of demand and supply? 2. How do we identify demand and supply zones? 3. Where do we enter and exit trades? 4. How do we draw zones? Before understanding what demand and supply means, we first need to understand market structure. Markets always move between balance and imbalance. So what does balance to imbalance mean? It means there are some areas where the market consolidates, balance, and some areas where it moves strongly, imbalance. From this, we learn that markets don't just move straight up. Instead, they move up a bit, consolidate, move up again, and repeat. They move in a structure. The boxed areas represent balance, where buyers and sellers are equal. The strong moves represent imbalance, where either buyers or sellers take control. This is the concept we must understand before diving into supply and demand. In this video, we'll focus on balance areas. One key thing to note is, the stronger the move out of the balance zone, the stronger the demand or supply zone will be. There are two types of zones: reversal zones, where price moves in one direction, consolidates, and then reverses. Continuation zones, where price consolidates during a trend and then continues in the same direction. Let's understand how we identify demand and supply zones. For example, a reversal supply zone is where the price moves up, consolidates slightly, and then drops sharply with a big bearish candle. This sharp drop tells us that sellers have stepped in strongly. The same applies to demand zones. Price drops, consolidates, and then rallies with strong bullish candles. This is a strong demand zone. Now let's see how we evaluate the strength of these zones. We compare examples and count the number of candles it takes for price to return to a certain level. The fewer candles it takes, the stronger the momentum, and the stronger the zone. For example, in one case, it takes 7 candles to return, weak zone. In another, it takes 3 candles, strong zone. This is how we identify strong and weak zones. Another way is by comparing the size and speed of candles. A strong zone will have a series of large momentum candles. A weak zone will have slow or small candles. Now let's see how we draw these zones and determine entry and exit points. For a supply zone, we take the high and low of the candle before the first big bearish candle and draw our zone. When price comes back to this level, we watch for bearish confirmation and enter the trade. For a demand zone, we take the high and low of the candle before the big bullish move and mark it. When price comes back to this zone, we watch for bullish confirmation and enter. Let's look at some examples. In one, price drops sharply. We draw the supply zone before the momentum candle. When price returns and gives a bearish signal, we enter short and price moves down again. In another, we draw a demand zone based on the candle before a big green move. Price returns, gives a bullish signal, and rallies again. This is how we use demand and supply zones for trading. Now remember, nothing is 100% in trading. Demand and supply zones can also fail. But with this method, our stop loss is small and our reward is large. That's the edge we're looking for. Hopefully, we all learned something valuable from this video. If you found it helpful, don't forget to like the video and subscribe to the channel. We'll see you in the next one.